Hello, chart watchers, and welcome to this Tuesday, February 5th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, you can see the market is at it again today. The Dow Jones Industrial Average currently up 160 points. The S&P 500 up another 9. The NASDAQ up 45, closing in on 7,400. And the Russell 2000, off of its earlier highs, actually down a fraction, but still up at 15.17. 10-year Treasury yield was up a little bit earlier today. It is down about 2 basis points today to 2.71%. Volatility index continues to drop. It is now down to 15.45. Yesterday, it closed below 16. And as we've discussed here on the show, the last two bear markets, 2000 to 2002, 2007 to 2009, the volatility index never closed below 16. So the fact that we are below 16 tells us fear is unfortunately for the bears, fear is coming out of the market, and that is not good if you're looking for prices to move back lower again. Technology moving up again today, up about 0.9%, actually reacting pretty positively despite a not so great report by Google. Consumer discretionary also having a strong day today. Computer hardware, look at the move we've seen in this group since Apple came out with their earnings report, really surging to the upside. Furnishings having a really good day in the consumer discretionary space. A couple of stocks out with earnings today. Estee Lauder having a really positive reaction to its earnings, while on the other end of the spectrum, Archer Daniels in the food products area getting hit hard, down at more than 6% today. You can see trading down near its low, and I think was the second worst performer in the S&P 500. Church & Dwight was the lowest or the worst performer, and Church & Dwight also reported earnings today. All right, Erin, wow, Groundhog Day again. Market just keeps going higher. I'm a little surprised. I mean, Amazon last week with its earnings, disappointed traders, went down, but the market went up. Same thing with Google. I don't know.
Well, it does get oversold, and I have to say, if this is the end of the bear market, I'm glad, but I still think we've got another down leg to go. And I think you're right about the VIX being so low, but I think it also tells us that we'll be seeing some lower prices here in a little bit. But I don't know. I don't know if we're going to go all the way down and test some of these levels that we did before.
I don't think so. I think the VIX that closed yesterday below 16 and continuing to move lower, and the way we're reacting, I tell you what, I went and we can, well, I don't know if we'll have time to talk about it later in the show or not, but I went through between last night after the bell and this morning, and I have 17 companies that either guided higher or lower, and I'm showing 13 of the 17 guided lower. And yet you see what the reaction is to the market. The market is past what's going to happen in the first quarter. I think that's what it's telling us, and it's looking ahead. Now, if the government shutdown, were to take effect again, and China-U.S. trade really takes a turn for the worse, then, you could be right. Maybe things roll over and we go lower. But I think what the market's saying is we're expecting things to be better than that.
Yep. Right now, though, I have to say this rally is the ascent, the level of ascent. It's very steep, and you really can't maintain that. So, yeah, I mean, I think we're due for a little bit of a pullback for sure. I have a real interesting chart I'm going to show later after the market update at the end of the show about bear market. We'll see.
Okay. There you go. You got a little teaser out there.
I do. All right, upcoming schedule. What's going on this week? Well, tomorrow we have Dan Russo from Chaikin Analytics. On Thursday, Roman Bogomazov will be here to talk Wyckoff. And then Mary Ellen is going to be back for What's Hot, What's Not on Friday. So we still have a jam-packed week coming ahead. All right, today's agenda, we're going to start off with the good, bad, and beautiful Tom's Workshop. Yeah, I'm trying to decide, are we a soap opera here or a Clint Eastwood movie? I'm not sure. 10 and 10, our first symbol is going to be Alexion Pharmaceuticals, ALXN. And then we're going to finish. I'm going to take you through a walk through the DecisionPoint Chart Gallery. I have a feeling a lot of you don't even know it exists. So we need to show you how to get there. And, you'll get to some of those charts I show that you might be interested in. So, all right, technical news and headlines. Let's get this show on the road.
All right, sounds good. Let's get into the key economic reports. January PMI Services Index this morning out at 9:45. Matched expectations, 54.2. And then at 15 minutes later, the January ISM non-manufacturing index came in just slightly below expectations, 56.7 versus 57.1. And the bond market says we don't really care. Down a couple basis points, 2.71%. And I will say, you know, in fairness, you know, the market's been very strong in all the equity market and the bond market as well. If there's one real big warning sign that's still out there, it's the 10-year Treasury yield. I mean, being so far away from the November high that we saw, whereas we're seeing the S&P 500 and some of our major stock indices climbing closer and closer to that November-December double top. But the bond market is not reacting in the same way. The bond market's not seeing what the stock market's seeing, and this continues to bother me somewhat. So if we did roll over, this is what I would suggest in the market. As long as we continue to trend higher and stay up above that 20-day moving average, I think things are safe on the long side. But if we start to lose those levels to the downside, I think you have to be aware of what's been going on in the bond market, because I think the yield staying down this low is telling us that the economic strength that the stock market seems to be forecasting, the bond market is not seeing the same thing. So this would be one big warning that I would say is still out there. It's definitely not in a full speed ahead type of market where you just go in, forget about it, and just go do your thing for 6 months and look and see what happened. I think you need to be real conscious of these technical levels. But anyway, 10-year Treasury yield today down 2 basis points, 2.71%. I'd like to see it get back up above that 50-day moving average. Take out these reaction highs around 2.80%, and then I think the yield moving higher means money is rotating away from treasuries. Those proceeds go into the stock market, and then I think it could potentially be full speed ahead, but I don't think we're quite there yet. Okay, let's take a look at the earnings reports. Google came out after the bell last night, and they beat on the on the bottom line, $12.77 versus $11.08, as you can see on your screen. They did actually beat on their top line too, $39.28 billion versus $38.91 billion, but still, market was a little, I don't know, a little disappointed with what they had to say going forward. Gilead Sciences, big miss on the bottom line. They did beat on their top line. BP beat bottom line. Becton Dickinson, Estee Lauder, we talked about that one earlier. And Archer Daniels, really not a good report at all. They missed by 4 cents, as you can see there on the screen on the bottom line, but they came up almost $1 billion short on revenues, $15.95 billion versus $16.83 billion. And when I get into the good, bad, and the beautiful, I was referring to earnings. We're going to talk about some of the early results in earnings season. And Archer Daniels certainly fit into the bad category. So we'll talk about that a bit more later. All right, let's take a look, though, at the one report that I think everybody is interested in and the reaction, and that is Google. Google did come out. They beat top line. They beat bottom line. The stock did trade down after hours last night. But technically, I think the stock's still in pretty good shape, and you can see it now down 9. I think at one point when I was looking yesterday after hours, and I didn't follow it throughout the entire after hours, but I did see at one point it was down about $30. You can see at today's low, it was $11.23, which was maybe about $17. It just doesn't seem to matter. Even these big companies that you would think would provide maybe leadership to the downside when they disappoint are not doing so. The market continues to rally despite some of these reports that have not been what traders would like to have seen. We just saw Amazon, as I said earlier, the move down a couple of days ago. I think that was Thursday after the bell. So, yeah, that was Friday, Monday, and then today, Tuesday. But you can see the stock is rallying, holding on to its 20-day moving average. So even companies that are disappointing continue to trade fairly strong technically, and I think that's bullish for the market. Let's take a look at a couple of these other earnings reports. Gilead Sciences in the biotech space. They did beat on the top line. Big miss on the bottom line, though. $1.44 versus $1.70. Stock gap down, was trading down 66 and change earlier. Back up now 68 and change, like we've seen so many stocks. This one moved down below the 20-day moving average, but trying to recapture it again from underneath. BP Ameco, you can see a huge reaction here to the upside. They missed on the top line, but bottom line blew it away. $1.04 versus 78 cents. Traders definitely rejoicing over this report today. And last 6 or 7 trading days have been really kind to BP. And the overall space, if we just take a look at the relative chart, which I like to do from time to time, you can see that relative to its peers, it's been going down. Its peers have been going down. But notice BP now is taking out or trying to take out these highs from early November, and the peer group is nowhere close to that. So what you have is a stock that is breaking out relative to its group. So if the group begins to strengthen more solidly on a relative basis to the S&P, it's not really doing that just yet. But if it strengthens, I think you have one of the leaders here in BP. So I like the report. I like the reaction. I like the technicals. Biggest problem is that money is rotating for the most part away from its peer group. And that's going to continue to create some problems, maybe a little bit of underperformance in terms of BP relative to some of the other stronger areas of the market. BDX, Becton Dickinson, they beat top line 4.16 billion versus 4.1 billion. Beat the bottom line 270 versus 258. Reaffirmed guidance. Stock challenged the high back in December, but has reversed pretty hard off of that. Now down about 2% on the day. And you can see, again, medical supplies have not been strong. Not able to break out over those the highs that we saw in November and December. And when you look down here, medical supplies relative to the S&P 500, they topped all the way back in June and have been moving lower. Recently, January, so the last 4 or 5 weeks, we've been seeing some relative strength in the group. But this is a stock now that reached resistance and has rolled back over again. So I'd be a little careful with Becton Dickinson. Estee Lauder, EL, really nice report here. Great reaction. Went all the way up to test the June high before reversing, coming back down some. But I do like the heavy volume, already over 6 million shares. This is going to easily be the best volume day in the past year. And when you look at a stock that's almost making a breakout and its peer group has been declining for several months, what you have is a stock that is performing really well on a relative basis to its peers. It's also performing well versus the S&P 500 with this report. So I would say that Estee Lauder looks good, once again being held back somewhat by its peers. And then the last one, ADM, just going to mention it briefly here because I will talk about it again in a bit. But check out the downtrend heading into earnings. Yes, it rebounded, but when you look at the rebound relative to the S&P 500, all it was doing, the S&P 500, you've heard this old Wall Street adage that a rising tide lifts all boats. Well, that's really what's happening with ADM. ADM just went for the ride with the S&P 500, was not really outperforming. So sometimes when you look at the absolute chart and you see this huge rally, you think, wow, they're going to come out with a good report. They've had a big move to the upside. But really, it was just the S&P. Everything was going up. So it just carried Archer Daniels Midland with it. But you can see on a relative basis, this is a stock that is not good at all. Continues to weaken. I'd be careful here. All right, Erin, upgrades, downgrades. What do you got for this Tuesday?
All right. Before I do that, somebody did ask in the chat room, what is exactly is top line versus bottom line?
Yeah, top line is just your revenues. So I always go to briefing to take a look at companies' earnings reports. And so they'll tell you how they did relative to expectations in terms of revenues, and then also earnings per share, which is your bottom line. So if you ever hear about bottom line, corporate America, they're talking about what their profits. And so that's what I talk about with them when I say bottom line, earnings per share. Top line is revenues.
Excellent. Yeah, I figured if it was asked in the chat room, there's probably a bunch of viewers out there who are wondering the same thing. All right, so let's go ahead and get started on upgrades and downgrades. Our first upgrade is Booking Holdings. Deutsche Bank upgraded it from a hold to a buy. I have to say, I like this chart. The only thing that I would be just a little bit concerned about would be this declining tops trend line. But it looks like we're getting ready to break out of a declining trend. We have that intermediate term trend model buy signal here on Booking, where the 20 just crossed above the 50. And then you've got this buy signal on the PMO that came in oversold territory. And now you can see also that the readings we're getting on the PMO are the highest we've seen since back here in that April-May timeframe. So I think this one's taking off. It's got a lot of momentum clearly, but I think it could probably continue. Just keep an eye on that declining tops trend line. Like I said, it looks to me like it's done with its declining trend, but that would be the area I would look for a little bit of a stumble.
One thing, can I add to that as well, Erin?
Absolutely.
Seasonality. This is one of the craziest seasonality charts out there. Booking loves January through May. Company has averaged like 32, 33% a year from over the last 20 years from January through May. So yeah, right there, what you're showing, really important to at least know that that seasonality is out there. So when you start to see the technicals picking up here in February, I think it's worthwhile noting that this is a company that does this rather consistently in the first 5 months of the year.
Absolutely. Excellent point. All right, let's move to the next one, Legg Mason. It was upgraded today from a neutral to a buy. I like this chart okay. The main problem I have is this PMO is starting to decelerate and turn over despite this nice rally that we're seeing here. So that tells me that even with this pop we're seeing right now, you can see that it did fall back, and right now it's trading near the bottom of that range, which I don't care for. And then, like I said, we've got that PMO starting to slow down a little bit. But we did get the upgrade today. It looks like I didn't draw in that declining tops trend line, but we're certainly over that. Next level, I would say, would be around $32, matches up with these tops back in August and September and the lows back here in July. So I'd say that's the next area of overhead resistance, and I'd watch it because of the fact this PMO is very overbought right now. It's in the overbought range for sure, and it is starting to turn over. All right, as far as downgrades go, Albemarle was downgraded today by Citigroup from a buy to a neutral, so not horrible. We did get the breakout from this symmetrical triangle, and typically these are continuation patterns. So to get the breakout to the upside and on the buy signal for the PMO, I thought that was that's a pretty nice little breakout that really is defying what you would necessarily expect out of this particular chart pattern. However, we do see, the 50 is well below the 200. And right now, price has come up to that 50-day EMA, and it is struggling to get over top of it. But maybe, just maybe, we're forming a little short-term flag, in which case that would push us up over this area of overhead resistance, which looks like it's about $87, $88. But look at the PMO, still looks really good. And unlike the one we just looked at, Legg Mason, the PMO is still heading straight. It's not decelerating at all, despite the fact we're starting to see a little bit of pause right now. So I think that's very positive for Albemarle, despite the downgrade. Kronos Group. This is one of those examples of a parabolic. If you're in it, congratulations. Those are always fun to ride. But I would say watch out right now. And, we did get this downgrade. GMP Securities downgraded it from a buy to a hold. So it's not on a sell based on what our analysts are saying out there. But this is pretty much a textbook parabolic move. And parabolics, when they do end up, failing or, breaking down, you usually have very little time. I mean, you can see right now, just with this pullback that we're finally experiencing, we had, mostly higher prices all the way up through here. And now you can see right there that we have prices fallen. We're not quite down to where I would say it's a breakdown of this parabolic, but just that move today to pull back is almost 3.75%. So typically when you see a parabolic breakdown, it usually falls to where the last basing pattern was. So I would say between $10 and $14, we could certainly see it fall that far. You might, like I said, I would, with parabolics, if I'm lucky enough to get on board, I set a trailing stop because, like I said, when they fail in a spectacular fashion typically. CenturyLink was downgraded today from neutral to a sell by Citigroup. You can see we're still in this declining trend, a trend that has actually accelerated somewhat because if you draw the declining tops trend line from up here, you can see it's not as steep, but now we're starting to increase the decline. I don't like the downgrade. PMO has topped now twice under the zero line. Look at the OBV is going the wrong way, as is the scooter. So I think that downgrade is certainly merited. So First Data Corp also downgraded from outperform to a market perform, so not horrible, by Raymond James. And I thought this chart looked fairly good. The PMO bothers me because it is starting to decelerate, but that makes sense when you have this area, where we pretty much are taking a pause after this amazing move to the upside. This looks really like a textbook flag here. And I've got the 20, 50-day positive crossover all the way back here for the buy signal. Watch for this one. We are getting that little tiny breakout, but I think, this one could move higher. I think relative to its peers in finance, this is probably one of the better charts that I have seen based on just the volume. But, keep an eye on, look at the volume, how it started to peter out on that move to the upside. So that, there are some technicals here that could be a problem, but, 50 just went over the 200, so I thought that looked good too. And that's it for the upgrades and downgrades. We did have a couple others I did not go through. As far as upgrades, Raytheon was upgraded today. And then we had a ton more downgrades. Control 4, Principal Financial, Rent-A-Center, Equifax, Kraft Heinz, and Ultimate Software Group was downgraded by 4 agencies today. All right, Tom, let's bring on the good, the bad, and the beautiful.
That was it.
All right.
Yep, it's not a soap opera, and it's not Clint Eastwood.
All right, well, let's see what it is.
It's going to be an early peak at earnings season and what we've seen so far. So these are all companies that have recently reported earnings. Of course, we still have a lot of earnings to go, so there'll be a lot more good, bad, and beautiful, and probably some uglies as well. But let's go ahead and start. I think what I'm going to do is let's take a look at each one of these that I go over on a relative strength chart. The ones that I like the relative strength I like to use. So I'm going to start off here with Synex Corp, SNX, and we're going to start with the good. So these are all companies that I think have reported some pretty good results. I kind of like them on their relative charts. They're not my favorites as far as relative strength, but I think that they are looking pretty good technically. For those of you who are not familiar with this chart, I think what I'll do is I'll start down here so that you can see how I have all the settings set. But each one of these charts below here, this is a chart of the industry group, the stock relative to its industry group, the stock relative to the S&P, and then the industry group relative to the S&P. And this is how you set it up down here under price using the price indicator. And then in your parameters, just typing in your dollar industry, dollar symbol, colon, dollar industry, dollar symbol, colon, dollar SPX, and then dollar industry, colon, dollar SPX. And that will give you those 4. I've changed the height to 1.0 so that it's easier to read. And a number of times, sometimes I'll use, if it comes up with candlesticks, sometimes I'll change the style to solid thick, but I didn't need to do that on these. Okay, so here we have Synex. So this is a company that just reported earnings, and you're going to be able to see a lot of times on these charts I pull up today, the big gap ups and the heavier volume. And that you can assume that is going to be the earnings report when it came out. So you're getting a positive reaction on, I believe, all of these companies I'm going to be going over. They all gapped higher. This one you can see pulled back, got close to filling the gap, and then started turning back to the upside. But the thing that I like the most about these relative charts is when I get a stock that is easily moving higher, breaking prior resistance levels, and then all of these charts below moving higher from left to right. That's what I really want to see. So for instance, SNX relative to the computer hardware stocks, you can see over the last 3 or 4 months has been very strong, continuing to push higher. The group itself, though, has just started to strengthen. So this I'm not going to put in the beautiful category, because I do think computer hardware still has a ways to go to play some catch up. So you do have a stock that's doing really well within the group. It's also doing well relative to the S&P, but this is where you can see the relative weakness of the computer hardware group. So the overall stock, I think, looks good. It's just that if computer hardware, which has been leading lately, but if it reverts to some of that relative weakness that we've seen, I think we could have some problems. Now, I'm going to go through a number of these charts, and I'm going to try to go through very quickly. I'm going to give you my best Mary Ellen McGonigal impersonation that I can can give you. I'm going to try and go through probably close to 50 charts here in probably the next 25 minutes or so. All right, let's take a look at the next one. So SNX, again, these are all the good that I've seen coming out of the stock market, out of these earnings reports over the past few weeks. Bank of America, really nice move up. Look at the pullback, textbook, coming back to the top of gap support, the 20-day, and then starting to rally off of it. When you look at the banks have not been very strong, and you can see they keep putting in lower highs, but Bank of America is broken out. So what you get on a relative basis is one of the stronger stocks in the banking space. So yes, banks are still weak. You can see that relative to the S&P 500, but you've got one of the best stocks within the group. And I like the volume that came in with the gap up and the fact that technicals are holding on the long side. LUV, love, in addition to loving the ticker symbol, I really like what stock's done since its earnings report. Big gap up. You can see the heavy volume, and it has continued pushing to the upside, not too far from the high we saw back in September. And you can see that love relative to the airlines, especially the last two and a half months, very, very strong. So it's been one of the best performers in the airlines. One of the problems, though, holding the stock back is that the airlines are just kind of going along for the ride with the S&P 500. Need to see the group strengthen. If the group strengthens, I think LUV has a great look ahead because this has been one of the better performers. OSIS. This is OSI Systems, and you can see a big breakout. I really like these stocks that sideways consolidate for a while and then break out. Unfortunately, its peer groups have not done the same. So you have one of the best stocks amongst its peers. You have a great stock relative to the S&P, but once again being held back by its peers. WWD. This is Woodward Governor Company. Really nice breakout again. Sideways consolidation, big breakout, volume increases. I like that combination. Normally, when you get a breakout of sideways consolidation on volume, you continue that move. So I would be looking for more price acceleration to the upside with WWD. But like the others I've been pointing out, WWD is doing great relative to its peers. But when you go all the way down here to the bottom, its peers really still continuing to struggle relative to the S&P 500. DHR. This is Danaher. It's a really strong long-term company, and they are in the medical equipment area. And you can see the company did just break out to a double top move above the highs we saw back in early October and again beginning of December. And it's actually outperforming the medical equipment group. And the group itself has been a pretty good performer relative to the S&P. The only reason I don't have this one in the beautiful category is that the stock's been going sideways for a while. It's a large cap. It's not a big, fast mover, but I think technically, I think it looks really good. A pullback to test this rising 20-day moving average is something I would be looking for. DOV, this is Dover Corp. Big gap up, nice earnings, got up here, tested overhead resistance, pulling back, I think the mid-80s, $84, $85, pretty good support. You can see the rising 20-day coming up from underneath. Once again, the overall group not great. So nice looking chart, but its group holding it back a bit. eBay, this is a stock, I'm going to show you a weekly chart in a minute, but I think it's broken a more intermediate to long-term downtrend with this move to the upside. I think eBay's got a lot of positive movement ahead in 2019. Beautiful move up, great volume here off this downtrend to break the downtrend. Once again, you can see that its peer group not very good. eBay, though, has been strengthening against its peers for the last 2.5 months. It has begun strengthening pretty strongly relative to the S&P 500, but its group is weak. If the group ever strengthened, you would probably see a lot of money rotating into a stock like eBay. So something to keep in mind as we go into the balance of 2019. EXTR, this is Extreme Networks. This is a little bit more of an aggressive play, but after gapping down multiple times in the second half 2018, we started to strengthen here at the end of October, early November. When we pulled back, we put in a higher low, and now we're putting in higher highs with increasing volume. Once again, the group not great, but Extreme Networks breaking out to its highest relative level versus its peers since probably back the last 5 or 6 months, doing the same thing against the S&P 500. So it is a smaller company, but the increase in volume, breaking out, and then also showing some relative strength, I think bodes well for EXTR. LLL, L3 Technologies, nice move up, very strong volume. Once again, this is in the defense space. Defense stocks starting to move better. Defense was one of the worst areas in the fourth quarter of last year. And you can see that LLL also was very, very weak, but it has started to strengthen. And now with this strength, it has actually broken out relative to the defense group. So if the defense stocks, which have started to show a little bit of life, moving to a 3-month relative high, if you see this ratio continuing to move up, I think a stock like LLL makes a lot of sense on the long side. Cree, this is in the semi space. Semi is not very strong. They have begun to strengthen a little bit here over the past 6 weeks or so, like the overall market. But Cree is one of the best performers within the semis, breaking out. And even though you're in a weak group with the semis, you can see how weak the semis have been relative to the S&P. Cree actually just broke out relative to the S&P. So I think that this relative strength, if we can get this breakout above $52 and get it to stick, I think Cree looks pretty good here. CPT, Camden Property Trust, got to mention a real estate stock, and you can see the big breakout here. Looks like maybe it's hesitating a little bit. The overall group is broken out. We know real estate's been strong. The only reason this isn't in the beautiful category is that it's not really been a great performer in its space. It has broken out, and the group is broken out, but on a relative basis, really since, back in October, we've been weakening. So if the stock can get back up, take out a couple of these relative highs versus its peer group, then I think it should be pretty good because you can see how strong its peers are doing relative to the S&P. So you got a company that reported strong results, nice volume, breaking out. I think this is one that's got potential to continue to strengthen. Deckers, this is in the footwear space, breaking out. We know footwear has been strong past couple years. It's a good part of the consumer discretionary area. Look at footwear coming back over the past 6 weeks. Now, that is a rally for sure, getting close to the highs it set back in October. On a relative basis, you can see footwear has been very strong relative to the S&P 500, and you can see that Deckers has been strong relative to the S&P and pretty strong relative to the footwear space. So I think this is one to keep an eye on. I don't like, reason this one's not in the beautiful category, I just don't like the way it's traded since gapping up. Big volume, it gapped up and it's traded down $6 while the market continues moving up. But I would expect at some point this to turn back to the upside. SYMC, software's been great. Symantec, not so much, but it is trying to make a breakout. I don't think I'd be jumping into this one just yet, but based on the increase in volume and the threat of a breakout, I think if we actually get that breakout and get through $24 on a close, I think Symantec looks pretty good because software has really picked the pace up again. And you can see relative to the S&P 500, software is one of the best areas of the market. So if you get a stock that's breaking out in an area that's strong already, I think that could bode well for the stock. Last one I have here for the good is Booz Allen Hamilton. This really nice performer, basically triple top here now between 52 and 53. But the fact that it's even back there testing these earlier highs when the peer group has not gotten close, and when, of course, the S&P 500 has been so weak on during that period. I mean, I know we've been strong here over the past several weeks, but when we look back to where we were at our all-time high, the S&P still has ways to go, and yet Booz Allen is breaking out or trying to make a breakout. So I think the group relative to the S&P, again, keeps this one out of being in that beautiful category, but I do like Booz Allen. Breakout above 53 would be bullish. All right, the bad stocks. These are ones that I don't like at all. Archer Daniels Midland. You can see today, this was one that just came out today, but just not good. Gap down. The stock on a relative basis, you might look at this and say, well, it was rising into earnings. Wouldn't you think that that would mean a good earnings? No, I really wouldn't, because as I mentioned earlier, all it did was just went along for the ride with the S&P 500. So it was just, it was one of those boats being lifted by the rising tide. Now with the earnings out, it's just continuing this relative weakness versus the S&P. And you can see its group, the food products group, not good. Been downtrending versus the S&P the last few months. Very not far from a 52-week relative low versus the S&P 500. So this is the kind of stock, if I was heading into earnings, I definitely would not want to hold because I don't like the way it's acting on a relative basis. The group is not getting a lot of money, and that tells me not to expect any miracle when the earnings come out. And by the way, there is a poll running right now, and check that out, because I am interested to see how many of you do hold stocks into earnings. Do you do it all the time? Do you never do it? Do you do it occasionally? If you wouldn't mind participating in that poll, we'll talk about that in about 15, 20 minutes. All right, what about some other stocks? These are some stocks that have not reported good numbers. They have missed top line. They've missed the bottom line, so they came up short on revenues. They came up short on earnings per share based on what Wall Street was expecting. And you can kind of see this one, OXM, this was back in December when it gapped down with earnings. And yes, it's been rallying, and maybe that's an exhaustion gap. But when I look at it on a relative basis, first of all, you can see clothing and accessories rising, but still way off those earlier highs, which means the stock, or this industry group, you can see has been in a downtrend relative to the S&P 500. And OXM over the past 2 or 3 months has been downtrending rapidly versus the clothing and accessories index. So you got a bad stock within a bad group. It is now just now getting up into this key area of resistance, but it is holding above the 20-day moving average. So this is the type of stock I wouldn't short it, but if the market started to weaken and started to roll over and you see the stock lose its 20-day moving average, that might be a sign for me to move in on the short side. Because once it goes below the 20-day, I would simply just have a closing stop on anything back above the 20. So you don't have to keep, you don't have to risk a whole lot. If the market rolls over, and this stock, because it has been such a weak performer, I think you could do really well on the short side if, in fact, it breaks that uptrend and breaks the 20-day moving average. All right, Worthington, WOR. This is in the steel space. Another one gapped down in December, has made its way back up. But look at it on a relative basis, relative to its peers, it's horrible. Relative to the S&P, it's awful. And steel did bounce a little bit in January relative to the S&P, but we're in a downtrend, pretty lengthy downtrend on steel. So again, not a stock I'd be overly comfortable holding. Apogee, another gap down. You can kind of see the same picture unfolding. Yes, we're rallying, but again, so is the overall market. The market's been on fire, so it's lifting all boats. The group itself struggling with some overhead resistance. The stock relative to its peers rolling back over again, and its peers relative to the S&P not good. So this is just not a particularly good looking chart. RPM doesn't have a whole lot of RPMs, to be honest. Gap resistance here near 58. Looks like it's trying to turn at the 50-day. Another one that's just not good. The earnings report came out really poor. We have rallied back with the overall market, but look at these relative strength charts. We're not seeing any relative strength over the last 30 days. Not in the space, not in the peer group, and not with the individual stock. So RPM, I think, being held up by the huge rally in the overall market. All right, SNV, Synovis Financial Corp, or Synovis Financial Corp. Okay, remember I talked to you about Bank of America being so strong among banks? All I have to do is show you this stock relative to the bank index. Look at this. I mean, it has been beaten up so badly relative to the S&P. Horrible. We already know the banks have not been a great area, but at least with Bank of America, money that's rotating into banks, Bank of America is getting more than its fair share. A stock like Synovis is getting less than its fair share. It is holding its 20-day moving average, so I would not short it here, but this is another one. If it breaks down below that 20-day, you could keep a fairly tight stop on the short side. AXP, a lot of banks and a lot of these specialty finance companies here. American Express, nice rally, looks really good, right, on the surface. Here's the group rallying. Here's American Express rallying. Well, American Express, even though the group's been rallying nicely, American Express is not getting its fair share. It's been downtrending on a relative basis for 2.5 months, and you can see the group is breaking out relative to the S&P 500. So American Express is in a solid group, but all it's doing really not even going along for the ride with its peers. So I think American Express is one that I would be careful if I owned it, especially on the long side. I'd be careful if it falls back below that 20-day moving average. Morgan Stanley. Oh, wow. Investment services, not good. Look at the group. The group's been downtrending, and Morgan Stanley relative to the group's been downtrending. Don't really need to talk about that one anymore. FHN, First Horizon, another one, among the banks. Look at the bank group going down, and on a relative basis, you got one of the weak performers again with FHN. So this is a great way to evaluate stocks within a particular group or versus the S&P 500. It's hard to outperform the S&P 500 if you're in a stock that's underperforming it. CapitalOne Financial, another one of the specialty finance companies. You can see moving lower. The group's been rallying last couple of weeks, though. CapitalOne with its earnings down, not really participating at all in this advance. Look at the relative strength. Horrible. Not good. IBKR. This is Interactive Brokers. I mean, you can look at this chart. It's not even rallying with the overall market rallying. Look at the volume trends. This is just not a good chart. Investment services going down, and Interactive Brokers, one of the worst performers within the group. WTFC. Wintrust Financial in the bank group, and once again, another very, very weak performer. AIT. Okay, this one is in the defense area, and the defense stocks have tried to get a little bit going here in the last month, but AIT gap down, really has struggled to even get back up to the gap resistance. Looks like to me it's trying to roll back over here, and you can see relative to the defense, horrible. And the defense relative to the S&P, yes, we've seen a little bit of rally last month, which is nice, but you can see relative to the S&P well below its high that it set back in August. So you got a weak performer and a weak group. Not good. Discovery, or Discover Financial Services, DFS. Once again, nice rally, but the overall group's rallying. Relative basis, not good. MKC, here we have McCormick and Company, you know, the spice company. This chart not looking very good. Big gap down with earnings, has hardly rallied at all, really hasn't rallied much. Looks to me like it's just sideways consolidating before potentially moving lower. And the thing was, among food products companies, McCormick was very strong on a relative basis up until 2 months ago, but it is falling off a cliff right now. Not a stock that I would want to be interested in here. ABBV, talking about the biotechs. This one's not a good one. Not a big rally here off that December low either. We're actually trading below the December low, and you can see biotech's not great, and on a relative basis, ABBV, one of the worst. All right, these next two are two that actually I could argue you could short at the current price. Gap down, big volume, comes back up. It's testing the bottom of gap resistance and the 20-day at 30.5. I mean, if I had to short something, this one certainly looks like a good candidate. Look at the asset managers group, horrible. Ben, which was doing well relative to the group, fell apart with all the selling that took place in December. So the rally was weak. Even when we had this rally, and you think, wow, it's looking pretty good, on a relative basis, it was actually dropping versus the asset managers. Was not getting its fair share, volume much lighter, and then we take a turn with big volume back below that 20-day. Now we test the 20 from underneath. Yeah, this one doesn't look very good. Same for Silicon Labs. Big gap down below the 20. We tested the low in December. We bounced off of it. I don't know. I think 81, 82, 82.5 in that range could be shortable. This is a stock that also its relative strength just fell right off the chart with this huge gap down. And then the last one I have for the bad stocks, Tupperware. Wow, this was a horrible report. Look at the big volume, the big red candle, broken support. It has really struggled to rally at all, and the group itself continues to decline. So you got a bad stock in a bad group. Here's the group relative to the S&P continuing to decline. So can't really say too many good things about Tupperware here. All right, so what looks beautiful when we go into these earnings, what's been really among the leaders? One of the first companies to kick off earnings season was Infosys, INFY. Big gap up, beautiful breakout above this prior top all the way back August and September, continuing to make more breakouts. The group itself has been, pretty strong of late, but look at the stock. Look at INFY relative to the group. Very strong. Same thing versus the S&P 500. I hesitated before putting this one into the beautiful category, but the group is starting to show some strength versus the S&P. I'd want to make sure this continues, but I think INFY looks good on this breakout after consolidating. I expect to see higher prices. I think a stock I mentioned yesterday or the day before breaking out was Atlassian Corp Team, software stock breaking out. You're going to see a lot of beautiful looking companies in software, ones that have broken out, either waiting for their earnings or broken out with earnings. Team gapped up here with earnings, pulled back at the 20-day, reversed back up now at a new high. Disclosure, I actually did buy into Team, so I own this one. But I love these charts. You can see software starting to regain strength. Team relative to software breaking out. Team relative to the S&P breaking out. Software relative to the S&P breaking out. That's what I think you want to look for as a momentum trader. LRN, Learn, or no, K12. I thought it was Learn. K12, look at the big volume moves here back in October and again in January. Huge moves. This stock was 16 4 months ago, doubling in just that time. Very heavy volume and in a group that's not very strong. I made another exception for this one. You can see the strength that it has versus its peers and versus the S&P 500. So I made an exception even though the group has been weak. This stock makes up for it with the huge move, these awesome candlesticks, big volume. I see LRN going higher. Watt, W-A-T, Waters Corp, sideways consolidation for months. Look at the volume bar, gap up, keep breaking up and moving higher. It is in the medical equipment space. So now you got a stock that is breaking out versus medical equipment versus the S&P, and medical equipment's been strong. Let's take a look at Xilinx. In the semis, now again, semis not great, but Xilinx has been awesome. Big breakout back in October when the semis were struggling, held its own. I mean, if you look back, the semiconductors really struggled through this entire period. And while the semis were just continually going down for months, Xilinx kept going higher. And then with massive volume just came out and blew their numbers out of the water. So this is a perfect example of how you can look at a stock that's performing extremely well relative to its peers, extremely well relative to the S&P 500. And when earnings come out, I would expect solid earnings. That doesn't always mean you're going to get a gap up, but I would be expecting good numbers to come out when I see a company that is outperforming both its peers and the S&P 500 by a wide margin. Starbucks. I think Starbucks getting ready to break out today. Beautiful move up. I think this is a cup. I was talking about this yesterday. Up move, little cup, handle the last couple of days. I think we were on higher. I'd like to see a little bit more volume come into Starbucks, but here are restaurants trying to break out. You got Starbucks relative to the restaurants breaking out, Starbucks relative to the S&P strong, and here are the restaurants have been performing very well for the last several months against the S&P 500. That is a win-win-win. UNP, Union Pacific, big gap up. This is in the railroad space. Just take a look again, though. Stock pulled back, but now has already cleared that December high, trying to make a breakout. Railroads, not too bad, especially over the last 6 weeks or so. But UNP relative to railroads, great. Relative to the S&P, great. And there's your railroads relative to the S&P. That, again, is what you want to see. Left to right, moving higher. HRC, Hillrom. Big gap up, came down, filled the gap. I think it's just starting to turn back up again. I would look for it to maybe make another run short in the short term back for that 106 level. But medical equipment again. So here you've got a stock that's breaking out. It just broke out relative to its peers, relative to the S&P, and you've got a strong group. MRCY, I mentioned this one the other day. I think it's one of the best earnings reports out there so far this year. We'd gone sideways, consolidated, gap up, broke out with increasing volume. Heaviest volume we had seen since back in on August, first trading day of August, where we had this big move up. So I think it's going to continue higher. The overall group, computer hardware, that's one downer for sure. But we have been seeing a resurgence of late in the computer hardware space. But I like this report so much, and I like the sideways consolidation. I think MRCY goes higher. Got about 3 or 4 more here, and then we're going to wrap it up. Again, fill out that poll if you haven't already. I want to see, get a pulse of what everyone does with earnings reports and whether they hold into those earnings. Stryker, another medical equipment company, big move up with heavy volume, breaking out, trying to make another breakout today. We go down the list. Now, Stryker relative to the medical equipment group was not that strong until it came out with its earnings. I think that breakout of this downtrend is also very significant. Boeing, wow, what a company, what a report, big move up, taking out the October high. Aerospace also strengthening quite a bit over the past 6 weeks, not yet breaking out. So what that means is you have Boeing breaking out relative to the group, relative to the S&P, and look at aerospace taking off, no pun intended, versus the S&P 500. MTH. Home builders, now you have to understand, I think home builders have turned the corner and are starting to move higher. So when you look at this chart, you might say, well, why is this one among the beautiful? Well, I think it's among the beautiful because home builders got trashed in 2017, and I think they're poised to go higher. So if they go higher, you've got MTH, Meritage Homes, breaking out above prior highs, breaking out relative to the home building group, breaking out relative to the S&P 500, and you've got home builders that have been showing renewed strength over the past 3 months. So that, to me, again, win-win-win. Last one, FLWS. I mentioned this just like Booking Holdings, where Erin and I was talking about earlier. I'll show you this in just a second on seasonality. But sideways consolidation, big breakout, massive volume. The specialty retailers have been strong of late. 1-800-Flowers breaking out versus its peers, killing the S&P 500. And you can see the specialty retailers not far from making another breakout versus the S&P. So those are the stocks I wanted to go over today. I want to show you the seasonality here, and then we'll bring up the summary slide. All right, so first, if you go back the last 20 years, February's okay, 1.8% on average, 50-50 chance. But look at March and April. 1-800-Flowers loves this time of the year, you know, first quarter into the second quarter. And now we've got a big breakout on volume technically. So I think it looks pretty good. Let's take a look at that summary slide. Lots of charts. I think there were, I'm not sure how many there were, 45 or something like that. I did my best Mary Ellen impression, Erin. I don't know if I can keep up with how fast she goes through the charts, but I tried.
I know she is she does move quickly in her California, which is Southern California. I always expect people to be a lot slower on their delivery because we're pretty laid back, but no, not Mary Ellen.
Not at all. All right, so there you go. 179 responses. The leading answer, 31% hold occasionally into earnings, 26% usually, 26% rarely. I'm actually surprised by the bottom two. Never 10%, always only 6%. So I guess eventually you have to sell, but I wouldn't.
Yeah, I think a lot of people maybe aren't, you know, true to that, you know, never always. I mean, I think that is a little restrictive. So maybe that's why people went for the others. I was in usually because you know, most of my investments are more intermediate term. So a lot of times I'll just end up holding through earnings, not deliberately, but also not, you know, it's not that I'm not paying attention. It's just usually it doesn't matter because of the length of my trade.
Yeah, I am in the never category. With maybe an asterisk, because I occasionally, very well, rarely.
Rarely. You're more rare.
Well, I'm kind of between rarely and never. Is there such thing?
I think so.
Yeah, I mean, I'm trying to think back. I'm going to say over the last 2-3 years, maybe once or twice, I have deliberately held a small position. I've sold the majority of my position, but I'm like, you know what? I really feel good about this one. And usually I am wrong. So I really got out of that habit pretty quickly. The other time that I hold is if I just miss, I don't realize earnings are coming out. And it's one of those, you see it like I've seen them after the hours. I'm like, oh my gosh, my company's reporting. And I just, you know, I lose my stomach. It's like, uh-oh. And again, usually it's not a good result when that happens.
Yeah, it is hit and miss. That's for sure. Sometimes it's like, whoa, great. That turned out wonderful. We got a nice gap up. But then, of course, the reverse can happen too.
Well, what I will say is that it is really important, I think, to follow relative strength. Because if you think about it, you've got firms like Goldman Sachs and, you know, all these different investment firms that are going out and talking to company management, and then they're coming back and either buying or selling for their clients. So if you follow that relative strength, those relative strength charts heading into earnings, I think they give you at least a sense of what Wall Street is expecting. And so if I've got a stock that's performing extremely well heading into earnings on a relative basis, I suspect that it's going to have good results. Now, it doesn't mean that it's going to translate into a gap up the next day. Sometimes it's buy on rumor, sell on news, but I would at least be expecting a solid report.
Mm-hmm. All right. Excellent. It was good to see all of those stocks for sure. Now we're going to look at 10 more for the 10 and 10.
All right.
Okay, are you getting ready there? Our first one's going to be Alexion. I've got the RRG up here right now. I always am interested in the ones you guys pick. This time it was another day where a lot of you have those northeast direction, which is what you want to see on the RRG. That usually means an improving, you're moving into an improving category by moving northeast. So most of these were doing that. And then the other thing, look at the healthcare, the industrial materials. This is usually not that much of our requests. We usually get far more in the discretionary and technology, and not so today. So I have to figure out some sort of sentiment, graph or chart to make up based on what all of you guys request. I think that could be interesting, although I'm not sure what it would chart yet. So we'll see. But anyway, let's go ahead and get started with Alexion, ALXN.
All right, this is an easy one. It's a biotech, but it's had multiple tests up around 129.5, 130. I mean, I think you can see that here in October, again in November, again in December. See that failure? Got the tail right up to that level and then put in a bearish engulfing candle. And look what happened after that. So here's the move up. What did we get yesterday? Bearish engulfing candle right at that level again. Until you get the breakout, I'd be very cautious of stock here in the near term. I do expect that if we pull back, we'll hold the rising 20-day moving average. I mean, if you look at the PPO now, how strong we are been, or how strong it's been relative to what it was when early December, all it was doing really was getting back to the center line. And so we had been in the negative territory. So reversing candle, I would have been a little bit more bearish back then than a reversing candle off of a huge uptrend like this. So I think you're going to get a pullback to about 117.5. And at that point, I would be a buyer of ALXN.
All right. The most popular in the chat room is Ulta, ULTA, of course.
Yeah, this is one that I like. I always say I should have bought it when my daughter started going to Ulta about 12 years ago. I would be on an island somewhere right now. For those of you who are not familiar with Ulta's long-term chart, let me just show it to you. Yeah, it was probably back in about here when she started going regularly to Ulta. So I could have gotten in probably around $10 a share, and it's $2.90 now. But I wouldn't hold through earnings reports. I would have sold back here. So
yeah.
That's pretty scary. But anyway, actually, let me get back over to the daily chart here. Yeah, right now it's just in this flag. So nice move up, sideways consolidation. See this pullback? This is what I was just talking about a minute ago with Alexion. Anytime you get this, the PPO looking strong like this, and you get a pullback test at 20, I expect a bounce. Now, so far, we moved up, looked like we had a breakout intraday, and that has is not holding at this point. So I think right now you're in this range, and I'm just going to say 282 to about 293. Which way do we close? If we close above 292, 293, and get some volume coming in, especially today, we're already up there once. You can see the volume picking up. So if we have a strong afternoon on Ulta, I'd actually be a buyer on a breakout of this flag pattern. I would be looking for a move up to test maybe that 315 level, but failure, and I think that could bring this 282, 283 level back into play one more time.
Okay. All right, the next one I have for you is one I don't recognize that we have done, but it's a gold mining stock, Gold Corp, GG.
All right, well, gold's been hot, and until that changes, I'd stick with what's working. I mean, it's been a nice uptrend. See the big gap up on January 14th. We pulled back. We've broken out above that. Continue to trend higher. The PPO looks good. Only thing is we're a little overbought. So I think if we were to pull back maybe to the area of that last breakout, so when we went through that black candle right there, let's call it 1060 or so. That's been holding on these couple pullbacks. So I think if we pull back maybe 4% from here, get back closer to that 1060 level, you can see the rising 20-day moving average would come up from underneath as well. I think that would be a really nice entry area. Volume trends look good, and like I said, gold's been performing really well, so I'm okay on the long side, especially on a pullback.
All right, let's see. The next one up is our comm services sector. Well, Pinduoduo, PDD.
All right. Well, nice looking charts. Trying to make a breakout over that $30 level, but it is overbought. Want to be careful if you get a reversing candle. If you get a breakout, false breakout above that 30 level here and leave that tail over 31, come back down, close around 30, that would bother me in the near term. Only in the near term. I'd be looking maybe for a pullback to that rising 20-day moving average where I think you're going to have really good support on any pullback. Nice volume trends, really good looking PPO. Again, I think the chart looks good. I would just be careful. If I'm in it, I'd be careful if we get a reversal this afternoon.
All right, let's see. The next one up is also one we haven't seen before. MOG/A.
All right, Moog breakout. I mean, not a real heavily traded stock. Many days below 200,000 shares. Some days below even 100,000. Today, only 31,000, for instance, and we're past the halfway point of the day. So not my kind of stock because I do like to have a little bit more liquidity. But technically, can't complain. I mean, coming off of this 20-day test right here, it's been straight up, right through key resistance, good volume on the move, continuing to move higher, but you can see RSI now 76. So this is another one I would simply be waiting for a pullback to test the price support. And it could even go below the price support. I think the rising 20-day moving average would be best entry if we see a pullback at some point to that level.
All right, let's see. Next one up is, let's see, UEC, or Uranium Energy Corp.
All right, nice breakout today. You know, if you like these little smaller stocks, and you don't mind taking some risks, I like this one on the long side. I like this breakout because we do have resistance at 139. We've got resistance at 135. We're going through both of them, and this is not light volume. So I want to get the confirmation of the breakout, but if we get confirmation of this breakout, the first area would be 150, 149, 150. But there's a chance we could run up to 180 on this move to the upside. I've really liked the volume that's been coming in here over the past week or so. And today's volume, 1.3 million shares. It looks like it's going to be over 2 million shares today. And we've only had one of those days in the last 3 or 4 months. So UEC looks pretty good. This is another one. You get a false breakout, long tail to the top, could be a head fake. But if we get the confirmed breakout, I think you could see some additional gains in the short term here.
Okay. Let's see. Healthcare provider, Centene, CNC.
I think they just reported. I think I saw their report this morning. I don't remember how it came in. Yeah, definitely looking at this candlestick. Gapped up, so far pulling back. If they beat on top and bottom line, I'd have to go back and look. Then I would be looking for a reversal, maybe somewhere around the 20, or maybe these tails down here, but only if they've beaten. I mean, they did gap up earlier. That's why I'm assuming that they probably beat. But you can see the gap up on decent volume back here in mid-January, and these pullbacks, this little flag area. There's your flag pole, here's your flag, and there's your breakout. I think that this pullback could create an opportunity, but I'd want to see it maybe potentially break down intraday and then reverse, come back up above 125, and then I could get in and put in a stop below the intraday low. So this is one, sometimes you can take advantage of this huge volatility on these stocks. I'd be watching it. I don't think I would do anything with it at this point.
All right, let's see. Next one, our only financial sector request, Ellington Financial, EFC.
All right, another one, very light volume, 50 to 100,000 shares, looks like normal. Great breakout, though. I think if we pull this one up on a relative chart, I think you'll see that the stock is performing extremely well with Mortgage Finance Group. And so relative to the S&P, it's performing well. And you can see mortgage finance versus the S&P had been performing well up until just these last couple of days. But this breakout, let me just annotate the breakout area, because this is a stock that sideways consolidated for a while. I do like that. Here you can see this is where we went sideways really for about 6 to 8 months before making the breakout. Volume pretty good. I would like to have seen a little bit more volume. And again, it is a light volume stock. But if I wasn't in, I'd wait and see if I get a pullback to test what should be pretty good price support now at 16. And if not 16, maybe 15.75. This area right in here, I think, will hold on any pullback.
All right. How about O'Reilly Automotive? ORLY.
I think this is a nice looking chart. I'm expecting a breakout. Anytime you get the sideways consolidation after an uptrend, and especially when you consider how weak the overall market was, we could draw a couple of lines in here, but those are the two key support levels. There's your resistance level, which we tested earlier today. I would be a buyer for sure, 320 to 330 area, anything down here. Otherwise, I wouldn't be buying it right below resistance, because you can see how many times we got close and then went back down to 330. So I want to be a buyer back down toward the lower end of the range or on a breakout. Now, if you get the breakout above 360, make sure you see a surge in volume. But this is a stock that from left to right, this has been a pretty good performer. And I think a breakout would be a bullish development on the chart.
All right. Then the last one, we haven't talked cannabis in a while. How about Aurora Cannabis, ACB?
All right. Well, it's no pun intended, but I guess it's pretty high here after the January run. There are others in the space that I like better. I think this has been a great run. Don't get me wrong. I don't like today's candle if it holds. It's occurring. Not only are we getting a reversing candle off of an uptrend, but it's occurring at a pretty key level at this November reaction high where we went just above $8. So it's already got some history of sellers showing up at this level and getting a reversing candle here. Here's that prior high that I was talking about. And you can go back. I mean, this has been an area where we've seen sellers on multiple occasions. So I would be careful on this one unless it reverses back up near the high of the day. I'd be looking maybe for a pullback at least to challenge that rising 20-day moving average. That's where you can see it had a great run after testing the 20-day about 2 or 3 weeks ago.
All right. And that does complete the 10 in 10. Here are the symbols that we just went over. I will have all of these charts up in the Market Watchers Live chart list. Just go to the Articles blog tab and click on the Market Watchers Live blog, and you will find the live chart list link right there at the top. I also include them in all of our recaps as well. All right, time for our final market update and that chart that I was going to show you. All right, and here we go. Markets are pulling back right now. In fact, you can see Russell 2000 has hit negative territory. Of course, it's only down, well, it looks like it's down just a little under 0.25% currently. Dow Jones pulling back, as is the S&P 500. Currently, the NASDAQ is up 0.25%, but also coming back. Notice S&P 400 hit some negative territory, but is bouncing now to the upside to stay in positive territory. Treasury yields are lower, currently reading 2.704%. Volatility, as we were talking about, got all the way down to a reading of 15, came back up and is starting to pull back just a little bit. We're now at 15.5 for the volatility index. Definitely, we're seeing investors feeling a little more comfortable with what's happening in the market lately. Energy, we can see, is lower right now, XLE. And then I was looking at also the renewable energy space, and you can see that we're about the same. We're not moving much except sideways. XLK technology, we're higher right now, 0.7%. Not a surprise when you see what's going on with the NASDAQ. And then I just had a couple of other stocks to throw in here for you. XLNX, we are seeing a move just slightly to the upside. And Teradyne, again, we're seeing these moves to the upside and now pulling back on some of these stocks and on these sectors. And I did want to just show you one chart that Carl actually pointed out to me. And it is on the New York Stock Exchange. And I had it up here, but I Must have moved it away. So first I want to show you very quickly the S&P 500 for the last couple months. And you can see, you know, we had that top back in January, but then we managed to get above that. And since then, we've been talking bear market. However, if you go and look at the NYA, just the New York Stock Exchange, we started a bear market there back in January, and we have not gotten back up. So for bulls, what you may want to think about is the fact that we haven't gone above that declining tops trend line, but I think that it's telling us that this bear market may have started earlier when you look at the entire NYSE composite index. So I thought that was a very interesting chart because I hadn't noted that back here in September when we got those tops on the S&P 500 and many of the other indexes, they were above the January top, and we didn't see the same in the New York Stock Exchange. So that's all I have for the final market update. I'm going to pass back to you, Tom, and get ready for that walk through the DP chart gallery.
All right, I just wanted to point out the personal products index having a really strong day today, up 2.25%, but it is up against some rather significant resistance. We had a gap resistance area that was created from this gap down back in October. That's where we saw a lot of selling through the end of October. The rally back to the beginning of December, of course, that's where the overall market topped. And you can see the personal products index twice tried to get back through this gap resistance, couldn't do it, went back down, essentially put in a double bottom. And now here we are again, gapping up, having a really nice day. And the big reason for it, and we talked about this one earlier, Estee Lauder. Estee Lauder having a really nice day, trying to make this breakout above the December high. If it does, then I would certainly expect the overall group to break out as well. But here is the personal products index right here with Estee Lauder. And again, on the relative strength chart, you can see Estee Lauder breaking out relative to its peers, relative to the S&P 500, and personal products over the past week or maybe week and a half beginning to show some strength relative to the S&P 500. So that's all I had. Just wanted to do a quick update on the personal products group, and excellent. I'll turn it back to you.
Excellent. All right, I'm going to take you on a walk through the DecisionPoint Chart Gallery. Some of you may be familiar with it. Many of you probably are not familiar with it. It works great whether you are a member or not a member because you still can get some of the information you might want. I'm going to just start right off the bat. We did get two new signal changes, so I just wanted to mention those first. The S&P 500, we did get a positive 20-50-day EMA crossover yesterday, so that did give us that intermediate term trend model buy signal. And additionally, on the NASDAQ 100, we also saw the same 20-50-day positive crossover, and now we are seeing intermediate term trend model buy signals. We also had gotten one on the Dow last week, and right now, OEX, we don't have it, but it's going to go through today. So we should get that buy signal as well. So where is the DecisionPoint Chart Gallery? Well, you can get to it from a few places. If you go to your member homepage and you scroll all the way down in Member Tools, there's the Chart Gallery link there. But you can also go into Charts and Tools, and on the right-hand side, there's also a link to the DecisionPoint Chart Gallery. What is it? Let's go look. So you're going to get the DP scoreboard right on top for whatever index it is you are looking at. And as you can see, you can get S&P 500. If you are not a member, you're only going to be able to see the 500. But if you are a subscriber, you're going to be able to get the Dow, all of these. Again, you get the signal table and then trend, condition, and breadth for all of them for the Dow, NASDAQ, S&P 100, very similar. So I'm going to go ahead and walk us through the S&P 500 really quickly. Actually, let's do one we don't look at very often. Let's look at the NASDAQ 100. So here are those signals. And like I had pointed out, we had the intermediate term trend model buy signal. So these charts are not annotated, but they have all of the DP information you could possibly want on in the gallery as you go down. So it starts off with your daily trend analysis. This is where you can see that 20-50-day EMA positive crossover that happened yesterday. And that was that buy signal we noted. We can see that the NASDAQ, got above that 200-day EMA. And if you are tracking declining tops trend lines, if you just look at this declining tops trend line, we went over that when we did get above that 200-day EMA. PMO is looking great and moving up. So as we continue down in the DP chart gallery, now you get the weekly chart. And you can see PMO on the weekly chart has turned up. We don't have that buy signal just yet, but this gives you that weekly view. Come down, and now you have the monthly view. And if you have a chart that you're not so sure about, we do have a little bit of about the chart. So it tells you a little bit about why we have the EMAs we have, et cetera, and how we use it for our analysis. So you can get to that as well. Monthly chart. As you can see, we've got a sell signal on the PMO on the monthly chart. This is the one that's really holding me back from getting out of the bear market stance. We are starting to see a little bit of deceleration here on the NASDAQ monthly chart, but I really want to see far more deceleration before I really can hop on board that we are done. Because as you can see, we've gotten the sell signals, and you continue on through. There's a lot, but it isn't until you start really getting that move to the upside on the PMO where you're going to get that breakout. All right, so we're going to continue down into the chart gallery, and now we're going to look at our market condition charts. Remember, these are only for the NASDAQ, which is, we don't look at these all the time, but they are available to you if you are a basic member or above for the NASDAQ. You can get all of these again for the S&P 500 if you are not a member. That's still available to you. So the NASDAQ 100, we have our Swenland trading oscillators specifically for the NASDAQ 100. And as you can see, we had this declining trend on the indicators. What I found very interesting, and I certainly would say encouraging, is that these indicators bottomed just before the zero line. So we are starting to see a little bit of oscillation above the zero line, and that points to short-term strength as far as these two indicators are concerned. And we move down, and now we have the intermediate term trend model oscillators for the NASDAQ 100. And there you go, the ITBM and ITVM. And, I was really concerned because I know on the S&P 500, and you can see also in the NASDAQ 100, our intermediate term indicators had topped and were heading lower. And to me, that was, the sign that it was time for the move back down in this bear market setup, or at least a pullback toward the, a correction mode. But we got these indicators to turn back up above their signal line, and they aren't really overbought yet. So, I mean, there are a lot of signals out there that were, coming out of the worst of this. And so I can't ignore those, but I still am moving forward cautiously. Now, here are some of the big picture indicators that are included as well. These are the NASDAQ 100 stocks above their 20, 50, and 200-day EMAs. So you get a big picture look here, and you can see the improvement that we've gotten since mid-December on the stocks that are above their 20, 50, and 200. So I look at this as your short term. This is your intermediate term look, and of course, this is your long-term look. And seeing the two, the short-term and intermediate term, bursting to the upside here, I think that also is very encouraging and looks pretty good. But now we are sitting in overbought territory here. So it'll be interesting to see if we get a pullback. You can see that, as noted here, the the NASDAQ 100 has gotten above those previous tops for the stocks above their 200-day EMA. And we're moving our way up. We're certainly not overbought here. So in the long term, if I continue to see this moving up and we start seeing more and more stocks that are above their 200-day EMA, it becomes very difficult to, at that point, call this a bear market still. It makes me think that we might be getting closer to the end. All right. Oh, if you click on the chart as well, it will bring you right there into the workbench. And this is a way for you to save these charts to your own chart list so that you can annotate them and use them as you wish right there out of the DP chart gallery. So a lot of people always ask me, how do I get your indicators? How do I get that chart to look like yours? This is one way to do it, just going straight into the chart gallery. And now another big picture, PMO signal analysis. This is your short, intermediate, and long-term picture as well. And you can see that as far as PMO rising, that means that you've got those PMOs, of course, rising. That it doesn't matter if it's above or below the signal line. It's just as long as it is rising, it counts. And 88% or 88 of the NASDAQ 100 are showing PMOs that are on the rise. And similarly, the percent of PMO crossover buy signals. So this is telling you how many have a PMO above the signal line. And 92 of 100 of those NASDAQ 100 stocks have a crossover buy signal in place. And then we can see if we come down here for the longer term, we've got the percent PMO above 0. And that tells you, of course, if the PMO signal, the reading, if that is above the 0 line, and that also is telling you that now in the longer term, we're showing some internal strength. And look at these numbers. I mean, we're really seeing such an improvement that came off of that December low, and we're maintaining above here, with PMOs rising. So, it's been between 75 to 100% here, and that tells me that there is that internal strength in there. And so, again, it becomes harder and harder to sit in a bear market stance when you start seeing all of these changes. And so you have to be flexible and willing to make that change. Now, these are the advanced decline lines. I use these as very short-term indicators. And as you can see with our advancing decline line for the NASDAQ 100, we're now reaching, in fact, have reached a level that we have not seen all year since October. That was the highest we had as far as the advanced decline line, and now we're seeing it come up above. So the question really is going to be, are we in a position of being overbought as far as these indicators go, or is this that signal or sign that things are going to continue to go toward the upside? And I have to say, this is looking quite good, but now we're what I would say is overbought as far as that advanced decline line. And so I would be looking for a little bit of a pullback or a correction at a minimum. This is the net new 52-week highs specifically for the NASDAQ 100. And then we've got the McClellan oscillators specifically for the NASDAQ 100. So again, if you walk through these chart galleries, you're going to be able to see the charts that really pertain to those indexes. I know that Carl and I write all the time about the S&P indicators that are like this, the McClellan oscillators, etc. And we generally don't look at these charts, but I just want you to know that they are available to you. And, again, if you just click on them, it's going to bring it up in your workbench, and that's where you can save it, annotate it, however you would like to do. Now we go down to sentiment charts. Now these charts are going to be the same for all of them. The only difference is the top price window is going to be the NASDAQ or the OEX or the S&P, because we only have data. There's only one poll from AAII that people say I'm either a bull or a bear, but this is how you can get that sentiment chart that I look at every week. And then here is that RIDEX asset ratio chart, a version of it that you can also copy and use. And again, we follow how many assets are in the bear funds, money market, and bull sector funds. And you can see where the money is flowing. And right now, as I was noting before, we're seeing money leaving the cash area, and it's now going back into the market. And it looks like we're starting to see a little bit more of them going into equities versus the bear funds, which you can see have been on the decline. And again, you can click here, and that'll tell you all about how to use that chart. So that's what's the cool thing here, and I'm going to make you a little dizzy. You can get these now. Here's the one for the Dow. And if you want to just scoot on down to the condition charts, here's those short-term oscillators. specifically for the Dow. The intermediate term specifically for the Dow. So you can look at these indicators and get a broader look at the different indexes and how it all fits together. So again, you can just click to go down to the breadth charts directly if you don't want to look at the others. And there you go, advanced decline for the Dow. Now I have to say I'm noticing that we didn't, the advanced decline line hasn't beat out the tops we had seen before on the Dow, but remember we had seen that on the NASDAQ 100. So I think that's just interesting to note. And then here again, you can jump back and forth. You can jump to sentiment. And as I said, these charts do not change. The only difference is that the price on top happens to be whatever index you're looking at, but the sentiment information below is the same as it is for the S&P and the rest of them. And so for those of you who aren't members, you get the S&P 500, you get all of these charts that I just showed you for the S&P 500, even if you are not a member. So you can go into the condition charts and look at our indicators for the S&P 500, go into the breadth charts and see what we're looking at as far as the net advanced declines and advanced decline volume. Look at here on the S&P 500 advanced decline line, we've definitely cleared these tops that we've seen this year for that. And that tells you that there is some internal strength out there that we really can't ignore. All right, Tom. So that was pretty much my walk through the DP chart galleries. Here is your summary slide right here. And like I was saying, you know, we got those two new buy signals, the scoreboard indexes. You can get the S&P 500 in that DP chart gallery, but you cannot get the other three if you're not a member. And remember, you can get to this from your chart tools on your member homepage all the way down, or you can go to that the free charts page and look down to the right, and you'll be able to get the link for that DP chart gallery there.
All right, sounds good. I do want to just let everybody know we got the Dow Jones right now up 97. The S&P is up just 2, NASDAQ 21, and the NASDAQ 100 28 points. Russell 2000, the only one in negative territory, down 2 points. And I thought before we wrapped up today, maybe we do this little game because we just talked about how, you know, companies, how they look heading into their earnings. So I pulled up a stock that's going to report after the bell tonight, Vertex Pharmaceuticals. And I want you to look at this stock relative to the biotechs. It's strong. Relative to the S&P, it's been strong, even though it's pulled back a little bit lately. And the biotechs had been strong until just these past few weeks. So this one looks pretty decent to me. So we'll see how this reports versus, I want to pull up one other, and that is Electronic Arts, EA, which has really struggled, bounced a little bit, but look at the relative strength here. Not good at all. And then Anadarko Petroleum, APC, last one. And once again, you'll see on a relative basis, not performing well versus the versus its peers. So I'm going to say Vertex has a good report. Electronic Arts and Anadarko Petroleum, who knows? I think it'll be an interesting little test. You know, we're only talking about 3 companies. It's not a very statistical or representative sample. But hey, it'll be fun. We'll see how it goes tomorrow. We'll take a look at them.
Indeed.
All right. I want to thank everybody for being with us today. Please remember to complete the survey as you exit. It is located below the video player. We'd love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here tomorrow. Happy trading.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.